Yes, it has been a bumper Diwali. According to the Confederation of All India Traders, the report that they put out, this Diwali season, we are seeing a record trade of 3.75 lakh crore rupees, and that's substantial. Also, we have some respite coming in the form of a cool-off when we look at our retail inflation for the month of October. That number has been reported at 4.87%. So yes, this might bring some relief to the RBI, and this when it comes to interest rates, but the Federation of Indian Chambers of Commerce and Industry, FICCI is warning of rising vegetable prices, that it may put a spanner in the works. So as we step into the new Samvat, what really should we expect? What is the outlook? To decode the consumption patterns that we're seeing right now, the direction that the economy is taking, let's welcome Independent Economist Saugata Bhattacharya on India Tonight. And he's joined by Praveen Khandelwal, the National Secretary General of the Confederation of All India Traders, CAIT. Gentlemen, warmest Diwali wishes to you from all of us here on ET Now, and thanks for taking this break from the festivities to help us understand all these consumption trends from both the industry and the economy standpoint. Let me come to you first, Praveen Khandelwal. The festive sales that are being reported by CAIT, the number is 3.75 lakh crore rupees. I mean, wow, it certainly seems like this sparkling Diwali right now, but give us some color to that data that you put out. What is India consuming right now that is adding up to these kind of sales figures, and which parts of the Indian population is consuming the most? Tell us.
Well, Diwali is a festival for everyone to celebrate. And this whopping 3.7 lakh crore is a record in last 75 years. And if we talk about certain numbers, then we have drawn out a ratio in our report, which goes 13% in food and grocery, then 9% in jewelry, 12% in textile and garments, 4% in dry fruits, sweets and other things, then 6% in cosmetics, 8% electronics and mobiles, likewise 3% in utensils and kitchen appliances. So in totality, if we see, every sector of the retail trade has grown to the expectations. Last year, this figure was 2.75 lakh crores. So therefore, there is a 40% jump in this Diwali festivity. And the most important thing is that the Prime Minister's Vocal for Local program has gone down well, and people have accepted it, and therefore the entire sale in retail trade was of Indian manufacturing goods. In this regard, it is worthwhile to mention that China has lost around 1 lakh crores of rupees business this festive year. In earlier years, Chinese item was capturing almost 70% of the Indian market during festival season. But this time, there was not even a single import from China. And that is why the entire focus was on the local goods. The mindset of the consumer has been changed diagonally. Now, consumer doesn't want cheaper goods. Consumer wants the best quality goods, and he ensures that it is not of China made. So this is something a great difference. And when we are ending this Diwali festival season on 23rd of November, then it will be followed by wedding season, which is again going to be a tremendous business opportunity for every Indian to trade. So therefore, this Diwali has brought much excitement not only among the trading community, but even for the consumers. And as the CIT has rightly said, Bhartiya Utpad Sabka Ustad.
Sense the kind of excitement about what has happened, and there is excitement about what could unfold in the future. But looking at the future, Saugata Bhattacharya, this kind of consumption that we are looking at, definitely very good for an economy, but demand also tends to drive up prices. And we've been in this battle against inflation. It's not over yet. What are the chances that this kind of upsurge in consumption that we are reporting in festive times, that this will not drive up prices going ahead, especially of essential commodities, even if you leave aside the discretionaries? And if that happens, what are the risks that you see ahead in terms of economic growth?
So, happy Diwali to you, Vikram, all your viewers. Thank you very much for having me on your show. You're completely right, and we just heard from CAIT that the signals that are coming out, not just from the festive season sales, but overall, seem to suggest that demand remains quite strong. So it's not just the overall sales in the system. Even what you've probably heard about from the Amazon sales, the online sales from Amazon, very strong, and 80% of those sales coming in from the tier 2 and tier 3 cities, which suggests a fairly broad-based demand in the system. Even earlier, we had heard news of automobile sales, four-wheelers, three-wheelers, two-wheelers, which still remain very strong. So overall, signs of demand remain quite strong. The September IIP number was a little bit lower than we had expected, 5.8%, coming in essentially from consumer and non-consumer durables and consumer non-durable goods. But that remains to be seen how things pan out in the month of October. But overall, finally, demand remains quite strong. What would this do for inflation? There is obviously, as you correctly pointed out, that if demand remains strong, then you would probably see some pressure on prices and hence of inflation. But the good news from the latest CPI numbers that you quoted is that the core inflation, and even headline inflation has come off to 4.9%, but core inflation has come down even more to 4.2, 4.3%. Which seems to suggest that despite core demand remaining strong, the ability of manufacturers, service providers, etc., to pass on some of the increased demand remains relatively muted. So that is very good news. That from a Reserve Bank's perspective, it is the core inflation which tends to be much more sticky than food prices is the key concern. Having said this, as you also mentioned, that food prices remain a risk. Globally, food prices, particularly cereals, corn, etc., remain high. In prices of vegetables in India continue to fluctuate. But the good news, again, in this part, in particularly vegetable prices, is that the oncoming winter season, typically seasonally, you see that food prices during the winter season typically tends to moderate. So hopefully, fingers crossed that there are no major adverse weather events,
right,
and food prices do not go completely out of control. We need to be careful about cereals prices.
That's right. And FICCI is pointing towards the possibility of a rise in vegetable prices, and that might impact the kind of inflation story that is now playing out. So going into the future, as far as you're concerned, Praveen Khandelwal, since you spoke about how India-made goods are being favored right now, how are you seeing that trend pan out in the future? What will it lead to? Do you see it giving more impetus to Indian manufacturers? And do they have the capacities right now? Or do you see them extending capacities in times to come to be able to meet that kind of demand? What's your sense?
Well, I certainly feel that this kind of trade, what has happened during Diwali festivity, is certainly going to strengthen the positivity in the manufacturing sector as well. As Mr. Bhattacharya has rightly put it, that the demand is certainly going to be there. When the demand is there, naturally we have to augment the supply side of it. And therefore, not only the corporate manufacturers, but even the small manufacturers will now find it an opportunity to enter into the trade in the main line and to meet the requirements of the consumers. So therefore, the coming days are certainly going to be good, not only for the trade, but even for the manufacturing sector as well. And we would be definitely witnessing some more industries to crop up, and certainly the government is also giving certain kind of incentives and so many other things. You were telling something about PLI, which is going to be implemented in certain sectors. So all these initiatives comprehensively will generate the manufacturing sector to an extent, and therefore I perceive that the Indian goods are certainly going to have not only a domestic market, but even we would be able to export our products to other countries. Mobile and toys are the two important sectors where we have become self-reliant, and now we are exporting to other countries. So therefore, just in pursuance of the wishes and vision of Prime Minister Modi, I think we are moving in a right direction.
Saugata Bhattacharya, you need consumption and investment activity to keep pace with each other. You think we are in sync right now? And what are the policies that you see on the monetary and the fiscal side that will ring fence India's growth despite the kind of global uncertainties that are being put out by, Morgan Stanley and others? When you talk about the geopolitical tensions, you're talking about slowing growth in China. These are global uncertainties. How do you think we are positioning ourselves policy-wise, both on the fiscal and the monetary side, to be able to fend these off?
So one thing, you remember that we had discussed this the last time. So there are two or three things. One, the coordination of the government's fiscal policy and the RBI's monetary policy has been very, very adept and agile over the last 2 or 3 years. They have managed to keep much of the external risks that we were talking about, which is the primary threat to India's growth story now. That has been managed very, very well. I think much more needs to be done. The RBI governor has mentioned in the last 2 or 3 speeches on the need to remain very, very alert as to incoming threats from the external side, external shocks, etc., financial market shocks. But I think we are now resilient enough to withstand a lot of this. I think the key problem that now lies is in goods exports, merchandise exports, because the global economy is slowing. The good thing about the global economy slowing, particularly China not growing too fast, is that global commodities, particularly metals and energy, are likely to remain relatively moderate. They're not going to spiral out of control. That remains a risk, but the base scenario that we are working with is that metals prices, steel, aluminum, all the other metals, plus oil, are not likely to go completely haywire, because that's one scenario that's frightening for India. Oil, as you know, Brent is already down to about $80 a barrel. The second part in this, India's resilience, as Mr. Khandelwal also correctly pointed out, this is very widespread now. We were talking about the geographic spread. I also want to say again from the Amazon study that many of the sales that have come in from the small and medium businesses, what we know as the small and medium enterprises there. So it does seem that supply chains have become much more efficient. In the automobile sector, the chip supply has become much more efficient. So I think the supply will also be able to match to a certain segment. And this is the India supply story that Mr. Khandelwal was talking about, coming in from the MSME sector. The third part that I want to say is that a lot of this demand is also now being provided by finance, banks, NBFCs, microfinance institutions, etc., credit to the retail sector, the buy now, pay later schemes, other credit card schemes, etc. And that, given the absolute lack of stress that we are still seeing in the system, also provides an outlet for demand as well as growth.
Supply side constraints at this point in time we're not seeing as a major risk. Praveen Khandelwal, tell us about margins. How are they shaping up for traders? What you've seen in this festive period, because I guess the 3.75 lakh crore rupee number is the gross number. But how have these margins shaped up? Have these numbers been driven by squeezed margins to ensure higher volumes?
Well, I think you will appreciate and agree with me that now it is a competitive world. Earlier there was talks of margin and all that, but now, because there is a stiff competition, so therefore the margins have been excused. Now nobody is bothered about the margin. We always play, the MSME sector always play on the turnover game. So therefore the turnover is very important. The larger the turnover, the larger the profit. So if I really talk about margin, for wholesale trade, the margin could be 2 to 3%, and in supply chain at the distributor level, it could be 5 to 7%, and at the retailers level, it could be 8 to 10%, depending upon commodity to commodity. But on the other hand, if we have a handsome turnover, then of course small margins are always welcome. So now the whole game is of the turnover. And that is how, even from a small retailer to a big trader, everybody is playing the turnover game to get maximum profit, maybe because of small margin also.
So right now the concentration is on turnover. Of course, if this Consumption keeps going up and demand sustains. We'll have to see how the RBI keeps moving on those interest rates to keep that balance between inflation and growth. And also, we'll have to see how the rupee moves and what the RBI does to keep it from sliding any further than it has. And that's an ongoing story, and we'll keep a watch on that. But Praveen Khandelwal and Saugata Bhattacharya, always a pleasure getting in your perspective on all that's happening from the industry standpoint, the economy standpoint. Many thanks and warm wishes for Diwali as well. Thank you.
Thank you.
Meanwhile,